Hi, everybody. This is Todd with the Forex Nitty Gritty Insiders daily video. Hard to believe that we're in December here and getting the month started out. I've had some nice moves here in the markets. This is an example of the trend on the 1-hour chart of the Euro US dollar. Most of the news still is around this fiscal cliff, and the Republicans and Democrats are going to be fighting back and forth until who knows how long. Hopefully, they come to some resolution that is beneficial to everybody. Until that happens, we're going to see a lot of choppiness in the markets. I don't know when that's going to end, but the markets this morning, the stock market anyway, are looking for a higher open on the idea that the fiscal cliff will be resolved. Gold dropping down below 1,700. Oil dropping down to 87-ish. So we are seeing movements kind of across the board in all markets. Right now, we have this week, when it comes to some economic news, globally, we have a lot of interest rates being announced. We've got non-farm payroll on Friday. And so we've got a lot of things happening that are possibly causing the market to show some added volatility. That volatility we need to be aware of and make sure that we're comfortable with the fact that we're trading in situations where that volatility is here. Now, when we talk about trading the simple trading method, and regardless of the pair or the time period, we're going to be looking at the same types of things, as long as the market is deliberate in the moves. And as we look at the market, it's never going to be perfect in how it moves, but it can give us times where things are better. And if we're smooth and we're deliberate in our movement, making higher highs and higher lows, then we're going to be looking for the setup conditions to occur by looking at the trend direction, the pullbacks, the entering in above the highest high of the last three or below the lowest low of the last three. And so as we look at the 1-hour chart here, what I'm going to do is I'm going to put some lines here on entry places. So as this started to move up above the highest high of the last three, we would have had an entry. That entry would have been somewhere in this area here. We get a pullback. We get an entry right here as it moves above the highest high of the last three. We also had a minor pullback here that we could have looked at getting in on this one here. And another pullback. The highest high of the last three would have been on this candle right here. We had an entry on this candle here. This candle here. That candle there. And this candle here. Now, you can see what's happened here. We've had the market trending up nicely. And so if we put on here, 40-period simple moving average, something like that, you can see how strong this is. And you can see as it pulls back, and really what we're looking for are times where it moves counter to that trend. Even if it's a small pullback, as long as we can identify some old resistance or support in this case, we can look for opportunities to enter into the trade using the simple trading method. Now, as we look at this last move, and you can see that we're having a strong move right here. In fact, over the last, over this time period, we've had a 160 pip move. Over the last 1, 2, 3, 4, 5, 6, 7, 8 hours, we've moved up almost 50 pips. So some nice, steady movements. So one thing that you can do is you can go through and you can look at this same concept with what's happening on the various pairs. Now we've got an hourly chart. Like I said, you can use this for any time period that you choose. And whether or not you like the shorter term or longer term, the rules for entry are going to be the same. So take some time to practice with that. If you have questions, feel free to let me know. If not, have a great rest of the day trading. And we'll be back tomorrow to take a look at how the markets continue.